Investors and traders, welcome to the channel Market Chart Pattern. Today is 24th of September 2023 and I hope everyone is having a great weekend. In this video, we are going to take a look at the key US stock indices as we always do for this video segment. This video is for educational purposes only and it is not a financial advice. So before we start to take a look at the key US stock indices, we will in fact go and take a look at the bond markets, and we will take a look at the bond markets through the eyes of the bond futures. So these are going to be treasury bond futures. So we'll start with the ZB. Excuse me. This one is the 30-year bond future. It is also known as the long bond future, or long bond for the actual underlying bonds in the industry because of its really long duration, 30 years. And the bond market is actually much bigger than the stock market. So it's also really important to take a look at the bond market and also then take a look at the stock market. And we also need to look at the dollar as well. So the dollar index video I did before that, I'll put a link to it. If you get a chance, please do have a look at that, especially the analysis for the dollar yen. Is really important where the dollar yen is, and it's really trading at critical levels. Okay, coming back to the long bond futures. So what we see is this market has been rotating lower, and we had been talking about it for quite a while. There are specific videos that I've done about it, just alone on the bond market through the eyes of the bond futures, treasury bond futures. And one of the key aspects is this bearish symmetry. So the bearish symmetry is still in play, and I'm not going to go through that concept again here in this video. And we see the market just keep on rotating lower. So we have had a few rallies here. Every time the market rally by about this much, it fails. So this is another symmetry concept which is in play currently in the live market for this leg lower. So there we go again. And what we are also seeing is that in terms of the intensity of the selling pressure coming in, it has also accelerated since the 20th of July 2023, so about a couple of months ago. And each time the market rallies to about 38.2% Fibonacci retracement, it finds great deal of resistance coming through, and then it sells off. So that was another 38.2% of this, 38.2% of this, and I am going to take this. If I move here, where I have this line and where the 38.2% Fibonacci retracement is, these are pretty close as well, within the 1 point distance. So I'm also drawing it from this top here. So maybe just because we have this ABCD pattern completed here, let me actually draw it here. I'm gonna move it. Actually, I will just move it, make a dotted line like this here, because that way it's easier to see few things. There we go. So we have this ABCD pattern completing here, a 1-to-1 price projection. Just because of that, there is a possibility that in an oversold condition, this market actually rallies for a few days, maybe perhaps a relief rally, and the point that we'll be watching is about 120, because that's where the 38.2% Fibonacci retracement is, and also in terms of the symmetry. So this is the region between 119.20 to 120.20 is something that we'll keep an eye on for the long bond futures market. Ultimately, we have an expansion of 1.27 to Fibonacci expansion of in this entire range, coming around 113. And if this trend keeps on moving lower, then we do have 112 as well, 112.26. So roughly we can say 113 is the level that we are looking for this market to move down to, and from there perhaps there is gonna be a stronger bounce. We'll have to wait and see and analyze if the market gets there, but it looks like this level of 113 is pretty important, and the market could in fact get there rather quickly. Now the bond market is inversely related to the yield. So what it means, if the price is moving lower, the yields are moving higher, which is an indication of rising interest rate environment. Let's also take a look at the 10-year Treasury futures note. Now, the Treasury futures note market is much bigger than the Treasury bond 30-year bond market, futures market, but it's showing the same pattern. So I've not drawn the exact lines, but I just want to convey that the bearish symmetry is still there, and this one has also broken this low. Let me try to get a horizontal ray around here. From oversold conditions, we might get a rally, the kind of rallies that we have seen in the past, something like this, maybe even a little bit less. But these are ultimately getting sold, so this market is also under pressure. So let's move to the S&P 500. This is the daily chart of S&P 500. This is the cash index. For longer term, I do like to take a look at the cash market. For shorter term, I believe the futures, the E-mini futures, ES E-mini futures, for shorter term market movement, that might be a better reflection. But here we are looking at longer term. So just on the daily chart, just to do a quick recap, the key pattern that we had been watching was this ABCD, which is the one-to-one price projection, and it went right up to the 78.6% Fibonacci retracement around 45.45, and it in fact went a little bit higher. And when the price was doing that, our analysis was that if the price remains strong on closing basis and moves higher, then the chances are that it in fact is going to go and make an all-time new high. However, if weakness creeps in, which in fact it did, then we are looking for the market to rotate lower and correct lower, and this is in fact what we have been seeing over the course of since the end of July. So approximately reaching a couple of months. Now, in terms of the level, before we move on to discuss further on the daily chart, I just want to show you the weekly chart as well. So this is the weekly chart of the S&P 500 cash market, and the one of the key levels that we are watching, where the market is fairly close to, is about this 4300. So 4300 is also an important support level, and this is where we could perhaps see the market in fact find some support from on a daily closing basis, because of also oversold conditions, and it could provide at least a bounce. So 4300 is one level that we are watching for, where the market could show at least a bounce. If that bounce is sustained, it could in fact also mean that that was a pretty good bottom, but of course we'll get to know that a little bit later on after we get further confirmations. But 4300 is something that I am watching. Let me actually draw a red horizon line here. Here we go. Let me actually make it a little bit smaller. And there we go. 4300. Now let's move back to the daily chart. Here, one of these key things that I wanted to point out to was this one-to-one ABCD price projection, which actually goes a little bit lower than the 4300, so 4275. So that aspect remains the same, but if the price keeps on moving lower, then we have this nice trend line coming in around here. We have a 200-day moving average, and also we have this concept of the market symmetry. So the entire BC leg, if we just project it from the D point, everything comes together at around 4182. So 41, 82, 83, that's the level. It's going to be a 38.2% Fibonacci retracement. It's got a structural support coming in from point B. We have the BC swing entirely projected from point D coming around here. Also, the 200-day moving average has been creeping higher and coming around this level. So a confluence of number of things tell us that, in fact, if should the market get there, it is a pretty important support level that the market will be trading against. and in my opinion 4300 does not prove to be a good support level. 4182 is the one that we should be really keeping a close eye at. And if the market begins to break this trend line, or in fact this 4182 level, then we have to be careful, and we'll begin to analyze the market in a little different way. Let's quickly move on to the S&P E-mini futures. So the E-mini futures again show something similar, but of course, it's a futures market. It's not the cash market. Trades 24/5. And again here, one of the key levels that we are watching is around 43 here as well, on the futures, so around 43. Yeah, it has a creeping 200-day moving average, moving a little bit higher. So not as clear a pattern of the one-to-one price projection. In fact, I didn't do that, so let me actually on this market as well quickly do the one-to-one price projection. Yeah, so we come to around 42.9650, so around 4300 on the S&P 500 mini is also very very important level to watch. Let's move to NQ. So the Q, so this is the NASDAQ 100 E-mini futures market. And of course, this market has been the one which had been leading the stock indices higher. That's a mirror image of what happened in 2022, because this was the market which was leading the overall stock market lower in terms of this one was the weakest one, and this one has been the stronger one in 2023. So here again, not going to go into much detail, but we have this ABCD pattern completing around here. We also had the 78.6% Fibonacci retracement nearby. We had some smaller patterns completing around here nearby, just because we had two confluence level, 78.6% Fibonacci retracement and this ABCD in black. That told us to be watching that price level really carefully. And what we have seen is a market just go sideways and then a retrace to 78.6% Fibonacci retracement around 15,755, and now it is moving lower. So the one-to-one price projection, what we're looking at is that the market could in fact rotate lower to about 14,350. So that's a really key level. Below that, we have the 38.2% Fibonacci retracement coming around 14,000, roughly speaking, so for 14,050. But it's pretty strong support at 14,350, and that's also going to coincide with the one-to-one ABCD price projection we were looking at on the S&P 500 cash index as well. So these are the key levels that we are watching. We have a 200-day moving average which is creeping higher. So the good thing is that the price is still above the 200-day moving average. It's a good sign from momentum perspective. That's pretty good. However, the price is below the 20-day moving average. So shorter term, the momentum is weaker. Longer term, this 200-day moving average should be pretty good support. So that's what we are watching in the NASDAQ 100 futures and Q100. Let's quickly take a look at Russell's small index. Wow, so this market has been, after completing this ABCD one-to-one price projection, just went lower. I think it's good to see it on the weekly chart, not on the daily chart. So on the weekly chart, what we see is just a very long sideways price action right at the 50% of this March 2020 lows to the highs formed in November of 2021. And the market has just gone pretty much nowhere. It just goes and tests the top of the range, then comes to the bottom of the range, and it's just ranging in between. Sooner or later, it's going to make a move to the either side, and then we'll have to wait and see which direction it's going to be. Normally what we see is that after the markets break out, normally the first breakouts, they kind of fail and the markets move back into the trading range, and the second one is where enough energy is built and it just breaks out. In terms of a true breakout, we'll have to wait and watch and see. Let's take a really quick look at the E-mini Dow Jones. So E-mini Dow Jones on the weekly level, this market is finding resistance from this level, which is 78.6% Fibonacci retracement of the 3rd of Jan 2022 highs, to the lows of in October of 2022. It's not able to convincingly break out of or above the 78.6% Fibonacci retracement, and it's just trading sideways. Perhaps it's also moving lower into the mid range, maybe go and test the bottom of the range. So we are also watching this level, but the concerning part is if it really needs to break above this 78.6% Fibonacci retracement around 35,150 on convincing closing basis, for it to be able to move higher and start a new bull leg higher. So guys, this is what we are watching in the S&P, the US stock indices, the key stock indices that we like to follow. I will also put a link to the video I've done about the Forex. It's important to also take a look at these markets, because everything, in my opinion, is a big flow chart of cash, where it moves from one asset, it goes into another asset. So we need to track these markets to be able to get a bigger picture of where the money is flowing. So thank you very much for watching the video. I do apologize getting a little bit longer the video. So thank you very much for watching. Good luck and good trading.